Thank you everyone for joining today's webinar hosted by the agency group, stock code AU1. Last week, the agency released its quarterly report for the period ended June 2021. And while the highlights of this will be discussed during the course of this webinar, the purpose of this webinar is to give you a more detailed overview of the business, its recent achievements and plans for the future. Presenting today will be Managing Director, Mr. Paul Neodoni, and Group CEO, Mr. Jeff Lucas. At the completion of the formal presentation, both Jeff and Paul will be on hand to answer any questions. If you would like to ask a question, please submit those in writing using the Q&A function on your screen. I would now like to introduce Paul and Jeff, who will run through the formal presentation.
Thank you, Dave.
Welcome, Paul. Welcome, Jeff.
Thanks, Dave. Thanks for hosting us.
David.
And thank you for everyone for joining us this morning in what will be one of many investor presentations over the next month or so. Unfortunately, this is the new life we have to bear with COVID. Face-to-faces are going to be quite difficult. And look, we're going through some information that most of you may know in terms of the structure of the company and how it runs, but we've decided to keep it in for new investors that are coming into the business. And I'll skip over that, but there's enough detail in the presentation and we're more than happy to talk to people offline separately after the presentation. So if I can go to the first page, Dave, of the executive summary. Obviously, there's the normal disclaimers there. I'd like to just quickly give everyone a quick snapshot of where we are. One of the interesting points is that you see at the top that the market's growing at $8.6 trillion. 6 months ago, that number was $8.1 trillion. And when we started this project, we were just over $6 trillion. So that just goes to show the growth in the Australian residential property market. So who's AU1 and the agency group? Well, we're Australia's fastest growing vertically integrated real estate business. And when I mean vertically integrated, we're talking that we have this whole suite of services, not just property sales, but management, property management, and also mortgage broking and conveyancing. Now, the interesting point here, is that in talking to US colleagues the other week, the head of strategy for Zillow, the gold standard in the US at the moment is the integration of mortgage broking into real estate businesses. This is something that we've done from the onset. So we've continued to grow our numbers in recruitment, and that's against COVID. COVID, with the JobKeeper scheme, basically made everyone stay in their jobs due to the money that the government was handing out. But even despite of that, we still managed to grow our real estate numbers. And the other thing that makes us different is that we have 2 brands, the agency, obviously, and SLP, which is just in WA, but we're going through a process of rebranding that and moving it national as well. So we have got a unique business model, and the statement that we've made from day one is that the core of our business is our agents. They're our clients, which makes us very different from most of the franchise real estate models. And because of this, I believe we've attracted some high-performing real estate agents in many markets. We just don't offer high commissions, but as you'll see from slides coming later on, we also offer support and marketing, which is very different from the franchise and independent models. More importantly, today is what we've achieved in terms of scale. So in 2017 is basically year 1 of starting. We listed, as many of you will know, the end of December 2016. In last year, we posted our maiden full-year EBITDA of 700,000. And this year, we will be posting an EBITDA of in excess of $4 million. So the board and the management team is very excited by that and very pleased with those results. The other things that we've done during the course of the year is we've stabilized our balance sheet. We've locked into an $8 million funding package. and we've still maintained the value of our rent roll and our loan book, which is in excess of $25 million. So we've added to the team, which is also very important. We've always said from day one that a new concept or a theory on real estate and what we were doing in disrupting the industry, we thought we had the right model, but it's all very good on paper unless you've got the team to implement it. And we've added to that team by welcoming Jeff Lucas on the board. And also we've secured our shareholder base with Bob Peters Investments. The macroeconomic winds, well, it's looking good, but who's got a crystal ball? The current growth is still quite strong for the property market. And the only outlier, I guess, which none of us know is how goes the COVID lockdowns coming in and out. But we now have a scalable footprint to roll our business nationally. We're recruiting high-performing agents. What you'll notice in our results is that while our agent numbers might not have been so high, our GCI numbers have increased substantially. And this is because I think we've got a good group of people, and the model's allowed the agents to do what they do best and be more efficient in what they do. Next slide, please. Okay, so here's a quick snapshot of our history, if you like. As I mentioned, we listed the end of December 2016. We expanded our operations from 2017 to 2019 with the addition of SLP and Top Level from the East Coast, which brought in Matt LaHood, Ben Collier, Shad, and Stephen Chen. And in 2020 and 2021, we've really driven the profitability, and now the model's kicked in, and the platform and the scale of the platform has allowed us to not only, as I said, recruit agents, but to make them more profitable with those margins dropping down to our bottom line. Our secret weapon is still, in my opinion and in the board, is the second brand that we've got in SLP, and we're very excited to look at launching that in 21-22. Next overhead, please. Okay, again, I won't go too much into this because this is the structure of the company. You obviously can see our property sales, our property management. The most pleasing part about this slide is the fact that we've started our commercial division, which is exciting, and we're looking forward to rolling that out. In terms of our sale, we expanded into Brisbane this year and have set up an office there. And project marketing has also kicked off strongly not only in the East Coast, but we're looking to establish the division in the West Coast as well. Next slide, please. Okay, so this gives you a snapshot of what makes us different in terms of the industry out there. So you can see on the axes, one is commission and one is level of support. The only companies in the top right-hand corner are ourselves and SLP. We have in the market at the moment, you have a number of copycat entrants that are coming in that are placing themselves in the top left-hand corner. They're providing high commission, but very low support. So no one's offering the support service that the agency does. And the SLP model will be a different model again from the agency that'll still offer support, if you like, but it'll almost be on a menu basis, allowing agents to pick and choose the level of support that they want. Next slide, please. Okay, just to go back and just reinforce what makes us different and how we're different from the franchise system. As you can see from this slide, what we effectively did is we took out the franchisee layer out. So where you've got the traditional franchise, where you've got the franchisor taking about 10%, the franchisee 40%, and the agents 50%. By eliminating that franchisee level, we were able to redistribute the commission. So head office could take between 15 and 35%, and the agent could take between 65 and 85%. Now, what's this allowed us to do is it allowed us to develop a strong support model for the agent that's different in any other model. Next slide, please. Okay, so just to go into a bit more detail on the difference, again, I'll just summarize this slide, but you can see here that the commission structures at the top, the expenses. So what we've effectively done is allowed an agent to run their own business within our business, hence why we call them our partners. And by doing that also, we've taken away all the financial and legal liability in terms of running their own business, but we've left them with most of the benefits of having their own business, which was a higher commission rate, the ability to earn income from other sources, and to build an asset. Next slide, please, Dave. Okay, so this now takes us to the key takeouts, where I'll let Jeff take it from here, and we'll then have questions at the end. Thanks, Jeff.
Terrific, and thanks very much, Paul. Thanks everybody for attending. And I guess just to open, I'm absolutely delighted to have joined the organisation just over 4 months ago, and very happy to take any questions from anybody that would like to ask me anything about that process of transition and what I've seen in the business, and what in fact excites me about the positioning that we've currently got looking forward. As Paul mentioned, these are the key takeouts from our financials that we released last week. They're not the audited accounts, but they're a look through to what we expect to be reporting. And our GCI, as we call it, it's an acronym for gross commission income. It's the total of all of the commission that's generated from our agents. We had exceptional growth in this financial year, up to $80.7 million compared to the prior financial year of 47.9. Our number of exchanges have grown significantly, again from 3,147 to 4,964. Now that's an increase of 57.7% year on year. Granted, the Australian market has been very strong this year. And in fact, we saw the Australian residential market increase by 40.7% in that 12-month period. We're delighted to have outstripped that, having 57.7% growth as opposed to the systemic growth of 40.7%. Gross value of exchanges, you know, it's a big number that. We've transacted $4.84 billion in property over the last year, significantly again up on the $2.94 billion the year before. The $25 million number there is really the vast majority of that. That's a hard asset that we have within our business that you won't necessarily see reflected on the balance sheet. And it's important because the banks will, in our industry, leverage rent roll assets to the tune of circa 50%, used to be 60%. And we're nowhere near that point of leverage. But the important point for investors to understand is we are backed by hard assets, being a rent roll in our mortgage book of with a market valuation of just on $25 million, which is important when you look at the value of the company in relation to that. Thanks, David. If you could go through the next slide. This slide here really just gives a graphical depiction of the key drivers of our business. And really, as Paul mentioned before, over on the top left-hand side, you can see how the agent numbers within the business has moved over the last 4 years. Now, they're not significant growth, but they are growth. We're clearly targeting in FY22 a growth that's in excess of what we saw in 21 over 20, which was 308 versus 283. And we're pleased to report that we're making very good progress on that basis as more people in the industry start to understand the compelling value that we offer for agents coming in and joining the agency. A couple of quarterly slides here. On the top right is the number of transactions that we've undertaken during the year. And I mentioned 4,964 is the sum of those 4 quarters. Importantly, of course, is aligning those specific quarters with the quarters from the prior year. And you'll see very, very strong growth levels across each quarter. Similarly, the bottom left, that's our gross commission income, tracking the aggregation of all of the commissions that our agents are generating. And again, very strong growth. And bottom right is the gross value of sales that I mentioned before, totaled billion for the year, which is a 64.6% uplift on the prior year. Thanks, David. This slide here just gives a very, very high-level overview of where the agency business currently operates throughout Australia. We are a truly national brand. We're very proud of that. We're certainly very proud of the representation that we have across in Western Australia, where you'll see the number of agents is currently the highest out of any of the states, being rapidly caught by New South Wales at the moment. You'll see that we're not in the Northern Territory or in South Australia. We do have the desire to enter those markets at the right time, but we're highly cognizant that the market share that I'll speak about in a moment, in the markets that we're in, that's the territory that we'd like to currently focus, because we don't have strong market share in each of those states as yet, but it has been growing. We've got an office footprint of 19 offices, but it's important to point out the difference in our business here. We don't believe in offices on every street corner. We don't believe that's the way of the future, and we certainly don't believe that that's an efficient use of capital to put down in office infrastructure. Quite simply, clients don't come there anymore. Clients like to engage either digitally or personally with our agents in the communities in which they work. So out of those 19 offices, 8 only across those 4 states are what we call hubs. They're large offices where agents can gather together for collaboration, for sales meetings, for group meetings, talk about listings, talk about the market, etc. And then they can move from there and go and disseminate into their marketplaces. We don't believe that they need to be in expensive retail offices that require large fit outs and refurbishments. We do have a model where when we put those 8 offices down, we have a recharge from the agents so that they're paying a desk fee to recoup that rent from us. That's where we differentiate significantly from the balance of the industry. Moving to the next slide, and Paul mentioned about the importance and the $8.6 trillion value of the Australian residential real estate market. And you'll see it there represented on the graph on the right-hand side. Interesting when you look at that 8.6 trillion and you compare it to the third bar of the ASX in its entirety of 2.8 trillion. So the Australian residential sector, the asset value is actually just over 3 times the size of the ASX, which is lost on a number of people. And it obviously translates into what is the market opportunity for our business. You'll see on the left-hand side, for the last 12 months, there was 582,000 transactions in the Australian sector, and that came down just below that to a gross sales value of 376 billion. Now, if we apply an industry standard of 1.6% commission on that $376 billion, you come up with a commission pie available to the Australian industry of about $6 billion. That's the pie that's available to the agents and the agencies that operate in our sector. Now, it's a very fragmented industry, and the highest market share in the Australian industry is currently Ray White, and they move somewhere between 9.5 and 10% of that $6 billion fee pie. Where do we sit? We had gross commission income of 80 million for the year, and we think that translates, depending on whether or not you look at number of transactions, we're at 0.85% of the Australian industry, or if you look at the value of sales, we sit at about 1.29% of the Australian industry. We're quite excited about the size of the prize there and the things that we can do to start to penetrate the market aggressively to participate rapidly in a higher share of that market. Thanks, David. Look, the next slide, and I guess a lot of people that look at the industry have read this or ad nauseum. These really talk about, on the top left, the change in dwelling values, and it's been aggressive, not unprecedented, but certainly the strongest rates of growth that we've seen in 3 to 4 decades. And then underneath also the change in sales volume. One of the things that I would like to point out is just on the right-hand side there, the third tick down, we've seen sales volumes increase for the year, as I mentioned before. We had 57.7, but the Australian marketplace had 40.7%. But if you go to the point below that, new listings increased by 22.4%. And that's important because if new listings are coming to the market and sales are higher than that, that means absorption of existing listings has been very strong. And that's an indicator that notwithstanding some of the challenges that we've had re-COVID, etc., the buyer demand has been extremely strong. We saw it coming out of the first round of lockdowns. We've seen it continue during certainly the last 6 months. And even in New South Wales over the last few weeks, we're continuing to see strong buyer demand, fueled obviously by low interest rates, and we expect those to remain low, certainly for the short to mid-term. Thanks, David. This slide here talks about our balance sheet position, and this has been an important factor, a really important factor for the agency in the last 6 months to 12 months. There's been a lot of work done on shoring up the balance sheet, and in fact, doing more than that, putting it in a very strong position to do the things that we want to do into the future. Total financing facilities at the end of the financial year were $8.35 million, and that comprises the $5 million facility that we currently have with Macquarie Bank, in addition to a $3.35 million convertible note that was provided by Peter's Investments previously. You'll see also the asset value we refer to down there of $25 million. So very, very good coverage of our debt position. Going across to the chart on the right, and we like the shape and the direction of this, you'll see the continued reduction in borrowings over the last 3 years and the increase in the EBITDA. We expect that those charts will continue in that direction into the future, and that's been a particularly strong performance in the last financial year, going from $700,000 to $4 million, and the debt coming down from 12.2 to 8.35 million. The convertible note of $3.35 million, that's convertible up until a period of March 2023. Thanks, David. This slide here just gives an introduction, probably needs no introduction, to the directors, the board of directors and the management team. You will all be familiar with the directors that we have. Andrew Jensen is listed there as the Chief Operating Officer. He is also currently the Executive Chairman. Adam Davey is the sole non-executive director based in Western Australia. And the newest addition to our management team has been Mark Williams. As Paul mentioned before, Mark is charged with looking after the growth of our commercial business, which we're also very excited with. Thanks, David. Just to have a quick look, I guess a corporate snapshot, and this is really the shareholding structure. So I mentioned Peter's Investments before, with 30% via the conversion of the first half of their convertible note, and there is a further conversion of the 3.35 million available to them. Daring Investments at 6% are entities associated with John Calenda, one of the initial founders and backers of this business. 8% directors and management, so that comprises Matt LaHood, also one of the founders of the East Coast business, and also entities associated with Adam Davey and Paul Neodoni. 16% are held by agents, and they're really the founding group of agents predominantly. Ben Collier, Shad Hassan, joining Matt LaHood there with Stephen Chen as the agents that founded the East Coast business. And the balance of the register is under other. So that's a quick snapshot of the constituents of our share register at the moment, and also an overview of the financials that we've achieved to date, which we're very pleased with, and a little bit of a snapshot into the structure of our business and the aspirations that we have going forward. I think now we're handing David over to Q&A if there are any questions.
Yep, we've certainly, thanks for that great presentation, Paul and Jeff, and providing the overview of not just what the business has achieved, but also what it's looking to achieve in the coming periods. We do have a number of questions come through, so I might throw them through. They're sort of grouped in a couple of areas, so just indulge me if you will. But so Paul, first one to you. When the concept of the agency was created sort of 4 or 5 years ago and you know, the blueprint was laid out as to what you were looking to achieve, what were the key measures or the key KPIs that were identified as the things you were going to focus on as a business?
Okay, thanks, Dave. Well, one of the key measure obviously was the number of agents, and I think if I pull out one of the original presentations, we had a target that we wanted to hit in 5 to 7 years of 600 agents. Now we're at what, 3.5 years at 300. So look, I think we're well on our way of hitting that target. The fact is, if you look at what we've done in the, you know, from zero start, from say the beginning of 2017 to where we are now, it's 300 agents, it's 80 million GCI. You know, I'd like to, I see no reason why we can't replicate that going forward. And that'll be just a linear representation, sorry. You know, if we can get that to 600 agents and, you know, north of 160 million GCI, this will make us one of the main real estate businesses in the country. Now,
you've clearly coming in and creating the new model and backing the model in have shaken up, and you've wanted to shake up the real estate sector, and I think it's fair to say that the business has done that. How hard was it to stay the course? And now looking at the financial results as they sit here, how much sort of excitement does that give you? Now you're looking at the EBITDA, the debt number, the agent numbers. Looking at it now, how excited are you by where the business sits at the moment?
Oh, look, I'm very excited, and Jeff will probably be able to add to this. If you look at now the new real estate businesses that are coming into play, that there's probably now in the last even 18 months to 2 years, there's probably 8 copycats, if you want to call them that, or similar models. As I mentioned in the presentation, they've targeted simply high commissions. There's no support. So we still have a very strong point of difference that's going to make it hard for the others to catch up. So agents are looking for 2 things. Obviously, commission's one. But when we recruit, we tell our new possible recruit to call our agents as a reference point. And I can tell you now, the agents don't start with the fact that they're on higher commissions. They talk about the support that they've never received before in the industry that helps them do their job better. So that is very pleasing. It shows that what we planned is working, and we were on the right course to deliver not just the high commissions, but the support for the agent that allows them to really develop themselves and their careers. You know, on top of that, we've got fantastic training that comes through Matt and mentorship from the team. So all those factors together, you know, just breed the right environment for agents to thrive. And we're continuing to go to the next level. You know, we're now looking at versions 2 and 3 in what we can do to assist in marketing and social media and database management. If you look at the US now and look at some of the top real estate companies there, you'll see that all these new models that are coming out now are starting to get a lot of market share. The Zillows, the buying groups. So the industry is changing. There's no doubt about that. It's going to continue to change, as all industries do. We're proud of the fact that we were one of the original companies to start rolling out that change. SLP obviously was one of the others. The fact that now we're together, we've got the 2 brands, we'll be more flexible and will offer more variety to the market and to the agents to pick and choose the model they want. That gives me great confidence that we'll continue to grow.
Jeff, a question for you, maybe a bit of a cheeky one. In your previous roles, you did have the chance to see the agency from the outside. When it came about and started to sort of make waves in the industry, what did you think as you saw it launch and grow?
That is a cheeky one. I look forward to seeing who the author of that was, David. However, yeah, it does provide me with a unique insight, doesn't it? I spent 8 years with the founders of this business in the McGrath business when I started in the industry. And that gave me an opportunity to actually understand their philosophies and to develop our joint philosophies around where the industry is going. So, we all went off and went our different ways, and I went out of the industry. And I could see what they were doing and the steps that they were taking. So I guess I had a unique lens into the strategy and the direction and the vision of that group of people, led by Matt and Stephen and Ben and Chad. And so I could see that was the right direction. And then when I came to join the business, I could see the opportunities created by that. So I wasn't surprised by the success that they had. Yes, it's been a very difficult, as any new business is. There's been some challenges over the first few years in establishing the business, but I knew from the calibre of the individuals themselves, working with them, and also the direction, the vision of that business, I knew that it would be successful. And we're starting to see that now. And, the numbers that we've produced in this set of financials, they're small numbers. Nobody's going to get terribly excited about the gross value of those numbers, the earnings, etc. But the important thing is the direction and the momentum and the opportunity available. And as Paul mentioned before, the validation of the model. I had an insight, as I said, into the validation. I knew it would work. And it's been really pleasing to see for the individuals involved the success to date.
Now you've had a chance to look inside the business. Has anything surprised you, or is it just further validation of what you thought may be there?
Yeah, it's interesting, and I guess being in the East Coast, people, and I don't mean this in a negative way, but people tend to underestimate the power and the strength of our Western neighbours. And coming into this business and seeing the extent, the strength, the breadth and the talent of our people in Western Australia, and indeed that market. I, in fact, grew up over there for part of my youth, and I'm passionate about that state. That, I guess, surprised me a little bit about the strength and the opportunity and the significance of that business to the agency business. Really excited about what we can continue to do over there. The other thing, I suppose, is what we loosely refer to as our roster. The people that are in the business, the agents, and the calibre and depth of talent within our business. And it really hasn't been that loudly promoted in the past. But having seen a number of different rosters in the industry, the depth of talent and skill and market share and reputation in their respective communities is immense in the agency. And I don't think that's been properly understood by the investment community, and probably not the industry, but just starting to see it now. So that was also a really pleasant surprise. Obviously, culture is critical in a people business, and that was another element of a pleasant surprise when I came into the business. I believe that culture is key in these businesses, and the way that the entire group get on, help each other, learn and disseminate learnings and build rapport and opportunities. I mentioned before, we're a truly national business. There are immense opportunities for agents coming in, whether it's in Western Australia, Queensland, Victoria, or New South Wales, or South Australia into the future. Immense opportunities to build rapport and network amongst the agency. So there are a few of the really pleasant surprises that I've had since coming into the business.
Sorry, David, it hasn't all been McGrath, because, if we look at Ray White, we've got Andrew Jensen, who was the ex-CFO, Mark Williams, who's joined us, was ex-director of commercial of Ray White, and even David Price, our new state manager in Queensland, had one of the most successful franchises of Ray White in Queensland, and then was involved in the mentoring and training of new agents. So it's quite a breadth of team individuals from a number of organisations.
And that's a good point. That's a great point, Paul. And that's the opportunity for this business. And then you go down to Victoria and you see people like Peter Takeouts and Michael Paproth, who have come from an organisation like Marshall White.
Correct.
And you know, those opportunities are presenting themselves to us all of the time, I guess, to cherry pick the very best from the different brands around Australia and to grow our own. That's the opportunity before us. But you're dead right, Paul.
Another cheeky one, Jeff. It seems like a nice run of these. You have had the opportunity to see franchise models and non-franchise models now firsthand. What do you think the future looks like?
Yeah, I have, and certainly, whilst at McGrath we operated a hybrid model. And the great thing about franchise businesses is you get the energy and the passion and the commitment, and the drive of the franchisee. I guess increasingly what we're seeing in Australia is a challenged franchising landscape. And so what we're trying to do is go directly to the agent. In fact, we're not trying to do it, that's what we're doing. In essence, it's kind of a form of a franchise because the brand there is offering its services directly to the agent. And we're able to offer them higher splits as a result of not having that intermediary there. And so I think we're able to pass more value through to the agent and back to the organisation. And increasingly we're seeing agents and some principals starting to appreciate that direct model. And so I can see pros and cons from both. And as I said, I operated a hybrid model before. I do think that there's terrific opportunities. You know, we're a 100%, I guess, company-owned business, if you like. And so I see terrific opportunities for that model going into the future. And we do things that kind of approximate the franchises as well. If an organisation comes to us and wishes to continue to own and manage their rent roll, they can do that. And so I suppose we're in essence a form of hybrid where we'll provide our management expertise for that property management portfolio, but the ownership of that can remain with that group of owners. So we're pretty flexible in terms of that. So that's the way I see it moving, David, into the future.
Maybe a question for Paul and Jeff. With something new coming into the market and getting success and getting greater success as the agency is now done, obviously incumbents start looking at it to think, how can we reshape our business to potentially match or take some of that success off the agency? How hard is it for a traditional business in the real estate sector to change its stream, so to speak, to try and align itself more like a model that the agency has?
Well, I might start kicking it off. From a franchise model, I think it's going to be difficult because of the agreements they have in place and the structure. Where we've seen if you like, the people coming up with similar models, using our wording and our philosophy of it being, the agent being the core of the model. These have all been new startups rather than existing businesses changing tack. And as I said, there's probably, in the last 6 to 7 months, 8 of them that have popped out. I still think they've got a long way to go because we obviously keep a close eye on them and monitor, and we know what the offering is. And it's basically being about a higher commission structure more than anything else. So we do have a jump on them in terms of the platform that we've developed, the IT that we use, and the support services that we deliver. And I think we're going to get a lot more of those copycats, if you like, but also see them a lot of them will start to merge into each other because it'll get to a point where there's too many and there's no real differentiation between them.
And Jeff, do you have a view?
Would you like to add anything, Jeff?
No, I don't think so. You know, we in our growth, we're looking, you know, there's three prongs, I guess. We're looking to grow people that haven't been in the industry. We're also looking to attract people that have been successful in the industry as agents. But also, I think it is a very, very compelling opportunity for principals as well, as we mentioned before. You know, you can continue to own your rent roll. And that's really the reason why a lot of real estate practitioners go into ownership, because they want to grow an asset. Whether that's their superannuation for the future. And so we've got a very flexible model that accommodates that. So I don't see too many barriers in terms of attracting, whether they're high-performing agents out of a franchise or whether they're franchise principals who want to go and do their business in a different way in the future.
And does the national scale, obviously, and then the foundation of agents underpin that and act as the barrier to new entrants, that you've got the scale, you've got the national presence, so anyone coming in, there's going to be a significant investment to even try and come close?
Yeah, I think scale is important. I talked about one of the benefits of scale before. Obviously, we can drive efficiencies in back end, which is so key for real estate agents, for it to come and for it to be a place to do business very easily and efficiently. But also the network that builds amongst your teams of agents nationally. You know, we're building some pretty important things there that pretty much put a moat around our business, I think, because you're right, as we get increasing scale, the barriers to entry climb.
And just touching on the recruitment of agents, so you've got sort of in excess of 300 agents, and through the key markets, you're aggressively looking to grow that, because, as you've said, Paul, it drops through to GCI growth, drops through to EBITDA growth now. What sort of agents are you collectively looking to acquire, and what's the message? What's the pitch to the agent?
Jeff, I can see you smiling, Jeff. So
yeah, look, it's agents, I guess, that share our value, our values, and it's really, you know, a lot of people have tried to question or criticise the model by saying you're just buying people by paying higher commission rates or higher splits. That's not it at all. We want to attract people that want a quality brand, that want strong, reliable leadership, that want simplicity in their business life, and that want to generate great results within their communities. It's not necessarily the commission rate that we're really attracting people with, because in some instances others are paying, you know, higher splits. So it's really people that buy into and share our values and want to be part of something that we think is a different way of doing real estate into the future. So they're the sorts of people. It's very easy, you know, we talk a lot internally. We've got significant growth aspirations in all of the markets that we're in. I talked about our market share hovering somewhere between 0.85% and 1.3%, depending on whether you value it at turnover, a number of transactions, or value of transactions. But it's more about who doesn't come than who does. And we've got a great opportunity here, because we've got a relatively small business, but it has a national footprint. We have a group of people that are currently in that are adhering to and buying into and valuing, you know, the philosophies of the business. And we're in a unique position where we're young and we don't have any legacy issues of the past. And so we can protect that and make sure that that exclusive club, I suppose, you know, remains true to those values. So they've got to be a cultural fit, and they've got to fit the people that we've currently got. And we talk about that with our teams. We're not going to go and hire somebody just because they can write a lot of income, but they don't share our values.
100%. Our culture is very important to us. And I think just the structure of our business allows that to cement itself, because we don't have competing offices as per most of the other organisations. They might have 2 franchise offices or 2 licensed offices working next to each other. because there is none of that office breakdown or boundaries. It's very strong in our culture that we're one team. And for me, what's most rewarding is when I see each of the agents helping each other out, whether it's to do a home open because of a reason, or passing on a listing because it's not quite their area and their forte. It's just amazing to see. And also the fact that they then all refer in to our mortgage business and our conveyancing business here in WA. It's something that's not widely done in many other organisations.
Now, we do have a question here relating to transactional growth. You talked about the growth in transactions over the last 12 months, outperforming the wider market. What do you put that down to? And do you think you've taken share off somebody, or is it, how do you outperform in terms of transactional numbers?
Yeah, so by definition, that is taking market share when the transaction numbers in Australia go up by 40.7 and we go up by 57.7. So definitely, and we are looking at taking increasing market share from the very low base that we're at. How do you do it? Recruitment, net recruitment, growing your agent numbers, agents that are going to be operating in the key markets that we want to be operating in. And so we've seen very strong growth in some of those key markets. And also, as Paul mentioned earlier, don't forget the efficiency as well. We're constantly refining what we think are very good back-end systems that make the job of the agent easier, makes them more productive in doing their business in front of the clients. They don't want to be held back doing the administration, etc. So when you look at measures of agent productivity, which I suppose is calculated by total GCI divided by number of agents, pleasingly, we've seen that start to lift as well. So it's both by recruitment of additional agents and improving the productivity of your agents that you have working for you. But yeah, it's a good point. We're really pleased with that outperformance of the market growth, because a lot of businesses are kind of talking about, we're up by this much, etc. But the market's up by 40.7 in terms of transactions. So that's an important thing to look. Well, how did you perform in relation to the market? Pleasingly, we had a significant outperformance.
And we look like we're getting to the end of questions, so we will wrap up. If anyone does have any last minute questions, please submit them through now. I suppose a question for Paul, and then I'll throw one to Jeff. Paul, looking back now on the last 4 years, did you actually think it was possible to do what you've done as a business when you laid the blueprint out 4 years ago? Do you look back now and think, I can't believe we did do it? Or do you look back now going, we did exactly like we thought we were going to do?
I actually think we did exactly like we thought we were going to do, despite of all the challenges, Dave. And it comes down, I guess, to the team and the culture. We started off when real estate markets weren't the best. The Western Australian market had gone through 7 years of downturn. The East Coast markets were bumping up and down, going down 20%, then coming back up. So it was difficult. We had a hostile takeover thrown to us. We had COVID. But I don't think anyone ever flinched. The board just kept going. There was never a thought of, giving up or stopping or the model's not working, because we could see the underlying numbers in the model coming through, and we were listening to what the agents were telling us, and we could see what they were happy with and what was working, what needed to be fixed or tweaked. I don't think there was one person in the whole executive team that thought, oh, this is going to go wrong or wanting to give up. We had no member leave us, which was pleasing. Everyone stuck with us, and in fact, we actually added to the strength with Jeff coming on board of the team. So for me, in terms when you look at the growth, if we've done it on a quarterly basis here. If you go back and strip it and look at some of the old presentations on annual basis, I don't think we ever dropped under 30% growth year on year, which was pleasing, even with all the constraints being thrown at us in the environment we were working in. So it's, I think we've got exciting times ahead, definitely coming with us. When we talk about the market share that Jeff outlined, WA obviously had 2-year jump, more than that, probably 2.5-year jump on the East Coast. But, the fact is in WA, we're now at 6% market share from a standing start. And that's against brands that have been here for 50 plus years. And as Jeff pointed out, have a 10% and have been at 10% for probably the last, 5 or 6 years. So if we can continue that growth, and I've got full confidence we can, I think the agency will turn out to be a powerhouse in the industry.
And Jeff, maybe throwing the lens the other way, and I'm definitely not asking for a forecast, but looking forward the next 4 or 5 years, what do you think the opportunity looks like? And if you look back in 5 years' time, what do you think the business will hopefully have achieved?
Well, I mentioned before, market share is an important barometer for us. And I suppose going back in history, probably not people old enough on this call to recall that, but Matt and I have a pretty good track record of working together to increase very low market shares to significant market shares. So we'll be looking forward to pushing our business, well into that top echelon of the major market participants. I mentioned it's a highly fragmented industry, and it is. To have the major participant at about 9.5%, and then the second place getter probably around 4%. It's enormously fragmented. So we see an opportunity, once we can communicate more fully the value that we offer to agents, we see an opportunity, a massive opportunity to consolidate that industry and therefore to increase the market share significantly. So that's certainly not a forecast. I will give a little bit of a commentary though. Paul talked about the challenges of COVID. One of the things that we have as a truly national business, and we've been benefiting from this, when one economy is suffering, the other might be doing well, and vice versa. And similarly with COVID, WA, God bless you, Paul. You're over there, pristine, maintaining your borders, and operating really, really strongly, and just coming out of a period now of school holidays. And that's been terrific. Down in Victoria, their market has rebounded really strongly after coming out of what has been a really debilitating sector of, repeated lockdowns, etc. But it's starting to really go well. New South Wales, interestingly, in the midst of quite a tough situation at the moment, for the last month, we didn't conduct one open home inspection, but instead private buyer appointments. And the ability to continue to do those private buyer appointments, yes, they're more laborious for our agents, but the buyers are more highly qualified. And don't forget my comments before about the strength of the buyer demand out there. So, we've seen our business operating reasonably strongly throughout the COVID period. Queensland, it's a new business for us. We're really enthused about the growth that we've had there in terms of agent numbers, quality of agents coming on. They're just entering a period now, as announced today, where they're likely to go into another week, perhaps even 2 weeks of lockdown. But importantly, again, the constraints on that business in our sector, and we're lucky, you can have private buyer appointments. And so, we'll leverage the learnings that we've had in New South Wales across to Queensland to make sure that we don't really miss too much of a beat up there. So, look, that's a bit of an insight into how we're travelling at the moment. So, yeah, pretty exciting landscape that we see over the next, I think you said 5 years, David?
Yep.
Yeah.
Paul, Jeff, thanks for a great presentation, very insightful, and for giving such a great overview of where the business is now and plans for the future, and for allowing Q&A from our attending guests who have been watching the webinar today. Thanks to everyone who has watched. I hope you've found the presentation to be both insightful and informative, and will give you a great understanding of the investment proposition, but also how the business runs. We wish you all obviously safe times and an enjoyable rest of the day. So thank you everyone for joining us. A copy will be made available later today or tomorrow on the agency website, but that's all for now. Thanks everybody.
Thank you very much for your time.
So